What's going on, traders? Hope everybody's having a great weekend and you had a successful and happy, healthy July. My name is Shark. Thank you so much for joining me here on this month's edition of the Futures Analysis and Trading Game Plan. Thank you so much for joining me. We're going to go over monthly charts, of course, on ES and NQ, weekly charts, some daily charts, as well as some day trading levels that I'll be watching coming into the next couple of weeks. We'll also take a look at some macro data points and other charts that help me formulate a game plan coming into the new month of August here. So, again, thank you so much for joining me. We are still in the middle of earnings season, so we're going to also take a look here at the earnings calendar. A lot of the big names have already reported, but still a couple of interesting ones to take a look at. And we have the economic calendar up for this week as well. We want to take a look at. With all that said, reminder that this video is for educational and entertainment purposes only, in no way should be viewed as financial advice. All right, so let's get into the economic calendar for this week and see if there's anything that we want to pay attention to. I do believe we have NFP on Friday, so that's probably going to be the biggest thing that I'll be watching here. ISM Manufacturing on Monday, August 3rd, 10 o'clock. Tuesday, relatively quiet overall. ISM Services on Wednesday the 5th. Initial jobless claims 8:30 on Thursday. And then really, to me, as I already alluded, Friday, August 7th, we've got NFP at 8:30. So that's going to be the most important thing. We got a little Fed speak after that from Barkin at 10 o'clock and consumer credit at 3. All right. So for me, most important thing, NFP, labor report on Friday. All right, let's take a look at earnings calendar here and see what we still have on deck. Mentioned already that most of the Mag 7, Apple, Microsoft, Google, Tesla have already all reported. The only last big name we really have is NVIDIA. However, still a couple of names, like I said, worth taking a look at here. So PLTR after the close on Monday. I used to be a big fan of PLTR, but not so much anymore. Really not from a business perspective as far as their revenues and everything like that, but more from a philosophical perspective on what they're really trying to do to the world, for lack of a better term. Pfizer before the markets open on Tuesday. McDonald's, interesting. SpaceX already here on Tuesday with AMD. So I think actually that day is going to be pretty interesting there with AMD, big chip name, and then we have SpaceX, which just IPO'd and has continued to sell off since that IPO. Merck as well on Tuesday before the market open. Disney on Wednesday before the market opens. Uber, Shopify, worth noting. Anything else? SanDisk after the market closes on Wednesday. And pay attention to that for sure. What else do we got? Let's see here. Datadog on Thursday before the market open. Nothing really else. DraftKings after the market close on Thursday. Airbnb. And not really too much else. Wendy's, just a fun little one to maybe take a look at on Friday. Gotta love that 4 for 4. Snapchat, I forgot to mention as well, after the close on Monday. And hopefully that crashes. We don't like that one too much either. All right, so that's all we've got on the earnings front. All right, let's get into some charts here. And new month, August, Leo season. And we're going to take a look here at the monthly chart. Why does my screen look so... Okay, trying to brighten it up a little bit. No, didn't really help. Taking a look at the monthly chart here. And blank chart, no other levels. What are we looking at now? Could this potentially be a bull flag starting to form? Absolutely. Still, momentum down just a little bit, but it's definitely still overbought here. High readings at 11.1. So that still is a bit high on the monthly. We've been watching that. Saw a little bit of momentum here at the start of the year start to come off, but eventually we're going to see this really start to show its face, and when it does, it will be quite the drop. We're not quite there yet. All right, though, but from the monthly perspective, and we'll go into some charts here that we already have marked out, but two major areas that we want to look at on ES, of course, boom, right? So this easily can be monthly lower or higher low, and right here, right back here as well. So these are the key monthly pivots that I'm going to be watching without a doubt. First one all the way down 61.67. Of course, if we ever do get down here, we'll probably have a contract change by then, so it might not be the same price. With that said, also 70.40 are the next highs I'd be looking for. So even if these are tested at some point, and I would love something like that. Even if these are tested in any way, it'd be a double bottom. I like those for longs, and I do like, let's delete that, down here for longs in the 61.60s. Say we break, back test. Come on, let's just, obviously exaggerated. Come down here, and then we look for the long. Maybe it comes up to this previous area here. Rejects. Then maybe we get the move, something like that. And then boom. Another thing to consider. Monthly chart, so obviously ranges are pretty wide. All right, let's take a look at the weekly chart really quickly here. Gonna move along. All right, one thing I will say, and it goes without saying that the SPOOs, S&P's been a lot stronger than tech. Overall, of course, we did have, Amazon, I guess that's consumer discretionary, but either way, tech overall, with the AI names cooling off, have been a lot more volatile and seen a lot more downside. With that said, look at this. Well, we're still in this balanced price range from ES on the weekly. Almost broke out of it. And you'll see that NQ did, in fact, break out of it and sold off, but was able to recapture. Okay, that's not what I'm looking for. Why isn't this activating? Pressing the wrong button. There we go. I guess I was. Sorry. Okay, so we had the balance range. Right. Yeah, we certainly, again, flag, pull, flag, consolidation, rally, base, rally. Okay, that could definitely be taking place, but right now, balance price range. Unless we see that displacement up and over, we really don't have a meaningful trend. So just be aware of the overall environment that we are in. The range is pretty wide here, so we do have a lot to play with. It's this looks like about, we'll just call it 300 points of range on these SPOOs. Pretty good, so definitely tradable. You play the edges there, and you have a really defined risk as far as from the swing trading context is concerned. But either way, we'll consider, up in this area, I personally wouldn't be going for the breakout trade, but up in here, is more of that premium of the range. Down here is the discount, so, I'd want to be a buyer down here and a seller up in this area until proven otherwise. That being said, very clear price range there. And let's open up one of the charts. Boom. Okay, here we go. And this is what we worked on last month, as obviously we really haven't gone anywhere. Still on the weekly chart here, we've got our levels tagged off, right? A little bit of look below fail here in July, back up to the midpoint of the range, just slightly over. So really no true, answer here about where we could potentially go with, as far as
unless we see really a break. So it's pretty cut and dry. We've got our pivots here. Let's get into the daily chart. If we did see some acceptance, look for that weekly acceptance, other 73.40s, and couldn't do it here. Couldn't do it here. So, and even then, you could say swing low, higher low. Let's see if we get another month, maybe a compressed candle. We have a low in here. Maybe we get something like this, you know. And we just kind of drift, you know, to that upward direction there to try to meet the equal highs at least, and then seeing about getting over. Let's go into the daily chart and see what we can take away from here. I will also say here, let's talk about the moving averages though real quick. Weekly, we're over all the major moving averages, so no issues as that's concerned. Let's take a look at the daily chart. Okay. Actually, you know, let me jump back into that monthly. Really quickly. Okay, I do have them marked off already. Let's cool. Okay. All right, smack dab in the middle, back over the 9. We were below all these, obviously, for a little bit. We are still below the previous week high, so I think that is worth noting. If you do see that, so I think that it would be fair to say that we would need over that previous week high. Let's just see where that is. Make sure it lines up pretty close to it here. 75.63 half. 75.63 half. Yep. Okay. So not over that. Looking for some daily closes over that area. I think that would be important. Once we get over there, as long as we don't do a look above and fail, I think that we should be good to go for higher. And that weekly high, I believe, is probably right here. This is 48, so that's not actually it. It's going to be one of these somewhere. So either way, let's see if we can get up and over 63, which is actually right here. So this area is the weekly high. Need over that, then we can talk about 7,600, 7,625. The other thing I will mention, we started to get a little oversold there. It wasn't anything crazy, but we're seeing this little bounce. Overall, though, we've got our swing high here. Lower highs, equal highs, right? Little sweeps here. But, I mean, even if it stays in this area, doesn't really make a difference because we haven't made a new higher high. So really, for me, from the daily context, need over 76.25. And that structurally will give us some more room upwards. Otherwise, we could just go sideways here for who knows amount of time, or we're going to break back under, and then, you know, we're going to go ahead and look to attack these lows again and see what happens. I would say as long as we hold over the 74.85, I would call that at least the more bearish consolidation, or excuse me, bullish consolidation. And if we're underneath, more bearish, and we'd be looking down. But if we're hanging out up here, I'm going to be looking more towards the up. All right. Cool. Let's break it down, get a little more granular here. Let's get into some day trading levels. Take a look at a 30-minute chart. Oh, gotta do a little extension. Yoink. There we go. Let me get this one, do a couple. Boom. Okay, cool. All right. What do we have here? Okay. So, what do I see? A little sell-off. I mean, it was very interesting on Friday. We sold off. I personally, we popped up. We sold down. I couldn't get on the short, on the sell down, on the way down. Maybe let's go into a 15-minute chart. It was very frustrating for me. I couldn't get on the short. Really, even from the 15-minute, I just had no opportunities here to get short. So I was huffing and puffing all morning. Very annoying. I mean, you barely had a real chance. Either way, we came back up, took this short, didn't really work. Then we had the fake out again, gave us another what looked like a short, just recaptured the 30-minute low again, and then continued just to get on a trend here. Certainly there were multiple ways you could have looked at this market, and on Friday, there's certainly, we could say there was some, areas in here that we came back and retested. This was our swing low, and we had a higher low here. We had the displacement back over the 30-minute range and then back into, and then we continued. But I was still thinking with this sell-off that we would see some sellers still come in and defend this area, and then we would head back down lower. Overall, they did see the sell at the end of the day down towards here. So I would say, though, anything in this overall trend is up. So this does look pretty ugly. This doesn't look too hot either, but I mean, especially as long as we hold 74.95, I don't really have an issue too much with still looking for moves, as like such. And even if we came down to 74.85, I really wouldn't have a problem. Let's see if the bulls can hold 7,500. Looks like so far they did hold that. When we can hold that here, we can push up and back into 75.13. Got to get back over that. A little bit of traffic right here, and certainly some traffic right here as well. So I'd watch out for some potential chop in this area between 75.04 and 75.15. But getting back over that 75.13 and especially 75.15, I would say. Yesterday's opening range right there. Opening range high. Right there. So over that, free and clear back into the 20s, and getting back over the 20s, then we'll look to go back into the original high of the day on Friday session around 3 o'clock. So that would be around 75.40, 75.36. I do have a level as well, but probably just getting somewhere in this area would be my thought. That we can do that. So either way, what do the bears need to see? Well, the best thing would be to hang out here under the 75.15 area. Maybe they can build up some pressure to take us back down to the 75.95. Already mentioned potential bounces there. But if they can get displacement sellers down, make a new lower low to 74.85, well, again, I'd be still cautious about a potential bounce there. Maybe we get something like this and it bounces back and retests the 75.40, picks up some leftover orders, and then we actually see that move all the way down. 74.75 would be my next area. A lot of traffic here, a little wick, so this will be interesting to see how this reacts. Maybe we get a nice rebound there as well, and if the trend was to continue, maybe we could get underneath that 74.75, 74.66. Okay, so that would be what I'm looking. If we get under that, okay, now we're talking about attacking this area and attacking the day's lows. So we'll see, but it's going to be a little bit tricky. The market's been very rotational, so we'll just have to see what semiconductors and are doing. Okay, I think that's everything that I wanted to go over on the SPOOs. Let's get on a blank chart. Let's get on to the nastiness. Let's find a blank one. Cool. Okay. Boom. Boom. Okay. Blank chart again here, monthly on NQ. Much wider ranges and very similar situation, although you can see the recapture of the June month lows, not quite as powerful as on the SPOOs. So again, we already kind of talked about that weakness, but as long as 26,450 holds, right? These equal highs are really, from that monthly perspective, I don't have any overall too many issues. Don't have the same type of flat top that I like. We do have some equal highs here that I'll be watching, but I would have to say this area would be my next spot relative. And that's all the way down at 22,043. So those are my key areas right there. Got to hold. Let me just flip back over. This is what I have here. I'm going to throw this right here. I'm just going to mark that off as monthly. Show you where that comes from. Boom. All right. Beautiful. Let's move it along. Let's take a look at weekly charts. These equal highs here are a little bit more better representative on the weekly. So, you know what I'm going to do. So, boom. So, I'm just going to mark it. Cool. All right. Here we have these equal highs for our weekly. All right. So, you can see here the real difference in the weekly chart between the ES and NQ. ES is right around here on the chart, and NQ still having some issues at the bottom of the range. I mean, as long as this stays, especially under 720, which we tried to get over. Yeah. What was the high here? Was that actually 763? So we did peak a little bit over it, but no can do as far as the close. So very vulnerable. Let's see if the tech sector wants to hang out like so. If this is bear, and then we could potentially say bearish consolidation and look for a move lower, maybe a retest, and then back down to these weekly lows potentially. So although if we can start to consolidate maybe in this area, feel a little bit better, gotta see a move over in a weekly hold over 28,720 for me. Then we could still pretend, then we have the chance to be able to come up. Still another area here, the weekly lows from the 22nd of June. Still could be a spot that causes some issues. I mean, I could even say, you know, we've got some problems as long as we stay under here. Still. So, it's a long road for the tech bros, in my opinion. The chart doesn't look too hot. We are below the weekly 9, sitting at 28, basically 900. And we are holding the 20 period moving average at 210, 28, 210. So there's good. Still above the 50, still above the 200. All is good there. Of course, we're not over the previous week high. Okay, so that's that. Let's break it down a little bit more into the daily chart here. Now this is a little bit more concerning, although look at the oversold here, and we're starting to see a little bit of a peak up, so that's good as far as momentum digging out. Where did we get? We just came down to the midway point on the weekly overbought, oversold Shraddha Momo, Shark Momo, so that is not really that bad. Okay, but from the moving average perspective here on the daily chart, still below the 50, the 20, and the 9. We did come back into the 9, and we did not close over it. We did get over it briefly on Friday. I know this for sure because I was trying to short up against it, and I got stopped out. With that said, nice moves here. This still, either way, is pretty much a dead cat bounce. I think it can come up a little bit higher. We're in the trenches here in the daily. I think we're going to come up a bit higher, and then we'll get the real test when we kind of interact with these lows, and certainly this area right here. I mean, on the daily, you can see this pretty clear. Some supply came up here, rejected, tried again, rejected. So for me, as long as we stay under 29... This is pretty much the daily. Yeah, this is pretty much the daily 9 again. 29. Did they move it? Or maybe I was shorting up against the hourly 9. Either way, 28, 360. And right here is 28.70 at 370. So that's the spot. Got to get over it. No hope yet. We will watch that very closely. That's pretty much... 360. I mean, the previous week high. Yeah, the previous week high and the daily 9 are right there. So, very, very close. Let's stop there. I'm just looking at how they just said no. Boom. Just equal highs right here. Pretty much. Relative equalize. Alright, let's get into some day trading levels. Where are we at? Okay, making new time. Boom. Let's throw out a 10-minute chart. That's fine. Okay, bulls. You gotta hold 28. 250. Hold 250. But doesn't matter. You could bounce up. Still got to get over 28. We'll call it 340. Getting back over that. Okay, we can go ahead and look for 400, 28, 400, 423. Get some traffic down here. So the 400s could definitely be an issue. But getting back over 28, 430, 425. All right, now we can go ahead and attack these highs. Up here in the just over 28,500. We really need over. Look at the traffic right here, right here, right here. 28.50, 550 is going to be the next spot that's going to be big to get back over, and then we can see about attacking these three equal highs here at 28,600, 28,620. So that's what I'll be looking for there. For the bear case, right, we want to at least hang out. We can hold the 28.50, or we can hold the 28.250, but as long as we stay underneath the 340, we consider that some bearish consolidation, and we'll look to see if they can actually break down underneath this 250 for the lower lows. Then looking down here back at 200, about a 50-point drop, breaking underneath 28,200, back down to Friday's lows, 28, 150, 145, pretty much lining up with what is this Thursday's opening range high. Either way, this is still could be a higher low from here. The higher swing low could be a higher low, so we can just rally from there. Very possible as well, but a bit tricky because either way, this is a higher, this is a lower high, this is a lower highs, and we're still obviously a lower high from the pop up on Friday in the morning. So it's a little bit tricky from that perspective, trying to get a trend count. This isn't the best look, kind of rolling over and failing. We'll see. Monday and Globex will definitely. Okay, let's move it right along. Let's take a look at some outside breath. Okay, RSP. Little potential. Look above and fail here. But you can just see it's strong. Overall market strong. No issues. Looking good. Only thing I don't like is look above and fail. But as long as it holds 205, I don't really have an issue with RSP. Definitely getting a little bit overbought here on the weekly. So we could actually start to see this get a little bit weaker. See if we retest that 205. Wouldn't mind some entries in that potential area. But shows you the strength overall in the market being broadened out. QQE is not going to look as good. Okay, but it is still holding the weekly 9 and 20 and 50. Okay, but it does not look as good. Obviously, it failed this little balanced price range. Really needs back over 118 basically and get back into this price range. Then we can talk about making a little bit of progress here into the 120s and then back up to the potential highs. Either way, you can really see the weighting. The QQE here and the RSP are all equal weighted ETFs, and you're kind of seeing overall how the larger cap names are really influencing, because if we take a look at QQQ, it's not going to look anything like this, and that's just because of it's not an equal weight market, and that does not look as pretty. And look at the momentum dying here, still at the zero line, but really just look at that roll. Look at that sell side curve. And just barely holding on to the balance range. Saved itself by the chinny chin chin. If we had got that monthly close underneath there, that would have been not the best look. So we'll see what happens on that. Okay, one thing I did want to actually point out here, where are my charts? I think it's here. Cool. Let's just awesome. We can just get a blank chart. Cool. On SPY, just wanted to point this out. Okay, wow. Look at this. Friday was risk on overall in our risk on, risk off scores. Weekly ended up being risk on. Month is closing out mixed. So that's interesting here. Last month closing out in a mixed score, so it's really the S&Ps, as I've been mentioning. The narrative has been just holding and doing all the heavy lifting. But heck, they closed the week on risk off. It was, I think, midweek. It was down to risk off on a 20 score, so it was pretty weak. But closing on a 66. Okay, decent. Nothing crazy though, but decent. All right, that's the one thing I wanted to mention there. All right, let's move right along and take a look at some ancillary data I like to take a look at. Let's actually take a look at some of the internals here for Friday. ADD, actually, this is interesting. We didn't even get positive on the advanced decliners, and inflows were actually negative. I think this is definitely worth noting for the market, considering we rallied like that. So that's kind of odd. Let's take a look how it was in the NASDAQ. Negative. And negative. So we had that big bounce back, but under the hood, it doesn't really look like it deserved it, and for a lack of a better term. You can see even here down the sector is down much more weaker, but XLY doing the heavy lifting pretty much all because of Amazon. Well, under the hood, though, not looking too good there. XOK down, everything's down. So a lot more of the sectors red on Friday than green, but SMH barely green, but XLC with the communications and Microsoft, I believe, had some continuation on their earnings. And we had Amazon, of course, ripping. So I think that was up 15 or 16% at one point. I'm not sure where it closed. Let's take a look. Oh. Yeah, close up 15%. So look at that. Boom. Holy moly. We'll see. Most equal highs here. See, well, look, check out what happens at 175, 275. Could have some issues there. Big old peg. So you can mark off that earnings gap too. Could take at least down. If they break underneath that 261, I really wouldn't be surprised to see it back down in the 258 area once again. Keep an eye there. Okay, let's look at some ancillary data. Okay, since I already have this up, just wanted to mention, I was just writing about this 30-year yield breaking over a huge spot. And as long as it stays over this, I mean, this is just free and clear. It's breaking out of this base. Dollar, there was some Japan yen intervention here causing the dollar to rip. Normally the dollar and yields are going up. Dollar should be going up. But with the Bank of Japan news, there'll be some yen intervention. Dollar got crushed. And we'll see if it holds 100. Actually, I'm long the dollar. I have to see how much when I'm down on that one. Actually, I should look. I didn't even look on Friday. Greens. Let's take a quick look. I'm down 1%. Okay, it's not a real fast mover, but not bad. Okay. So 30-year yields ripping, unbelievable. All right, let's look at how many stocks are trading over their 50-period moving average. Another breadth indicator here that I like to look at, and they're 200 in the S&P. Strong still, over 50%. We were up in the 70s there. A little pullback, no concern, really. We're not even overextended on overbought, oversold. Usually around the 75, I like to start to get a little contrarian, but nothing, didn't even get there. Either way, strong above 50, no issues there. This one's a little bit interesting. New highs versus new lows coming down just barely under the zero line. We will watch that to see if that gets, but here, this was decently strong up in the 130s. I mean, nothing crazy, 145, 130, but either way, no, by no means a raging market, bull market, obviously, but it was holding up. Now, getting a little bit interesting. We'll see. I mean, this is just flat. Let's see if we can get some weekly acceptance under those zeros, and that could be, we'll sing another story. But a little flattening out there, so, All right, let's look at junk bonds in isolation. Coming up with the market. Everything's cool there. No issues. Okay, little bounce from TLT. Oof, then here, look at that 30-year and the long end bond here. Oh, God, just look at TLT just getting crushed. 10-year coming down. Oh, and the short end of the curve here with HYG, the shortest bond, coming up a little bit on the front end of the curve. And the rest of them just pretty much look like poo-poo. But that being said, definitely getting a little bit oversold in the dumpers. This one at least has a little bit of a divergence here on the 5 to 7. Right, is that what this one is? I always forget. 3 to 7. This one's the 7 to 10. Yeah. So this is the TNX. This is going to be that other one that we were just looking at. These could probably bounce. They probably need to reset a little bit. Doesn't look too good. Okay. What else we got? Okay, credit spreads. Okay, now we're officially, we've broken over in a meaningful way here on both our credit spreads. And yeah, it's risk off here as far as this view is concerned. I was watching because I was looking at this back in August or back in July. and it wasn't over that 50, but now we are over the 50. Let's see what happens. Kind of double topped around this 1.3. So we'll see. Either way, over the 50. Both of them are looking strong there. And our bond ratios, everything here just saying yields continue higher. So bonds still in the doghouse and just probably going to still sell off with even as long as these hold. So, yep, expect more of the yields to continue. Already kind of looked at the dollar. Okay, this is actually interesting in the dollar, though. Seeing not that much relief. The gold down, okay, on Friday, 62 points. No relief from gold at all. Barely, can't even really get back over that daily 9 yet. So paying for the gold trade. We've had that strong dollar, so that makes sense. I still like gold, though, especially, if they reprice, and that very moment may happen. But the interesting thing here is that the dollar has actually done what I didn't want to see, and definitely on the weekly, it's a bit overbought, and I think that's why we're seeing this move. But we had this multi-year consolidation, and we tried to break up over it and now failed. So as long as we stay under this 131, it's not looking good. I'm going to monitor this. I'm going to see if next week we still close underneath. I'll probably ditch the dollar position because I was really going on this breakout. So that's unfortunate to see, but it is what it is. All right, we did have FOMC, no rate change, and inverted ZT. Pretty much, we already knew that. This is not even going down, so nope, nothing there. Put call ratio in our balance, no issues. Skew, slow to load. Oil vol, trapped here, needs under 54.85, needs to get under there. Looks like it wants to get back up and higher. Needs over 72, or 72, yeah, needs over 72. That looks strong. Skews loading on this one for some reason. Okay, not really any long dated puts, coming down a little bit. Oil volatility does look like it's starting on maybe a J hook here. Possible inverted head and shoulders going on. So that is interesting. So let's see if we get some consolidation here and a rip up, and that could potentially put pressure on the market. And we'll see if we get some more Iran news. That being said, volatility, let's look. We're still in a contango. No issues here. Vol pretty much getting crushed down. And I think a little bit of this was coming into FOMC as well as those big earnings. It was pushing up IV and volatility in the markets, cooling off on the VVIX. And so when we're coming down to 16, big crash, couldn't get over that 20 again on the regular VIX. Let's see what happens. This is my big spot here. Okay, so you can see how many times I love this 16 area, 15.75, and we could just see a bounce from here and come back up. And we would need to see the VVIX really back over 103, 105. Really couldn't hold over these relative equal highs. So either way, that kind of looks weaker. We'll see what happens on Friday. If we do get on Monday, probably get a little bit of a bounce there. All right, I think that's everything. Oh, rates just coming down a little bit. One thing I will say. Oh, here, let's get back in this one because this should switch back to TNX. Yeah, look at the 10-year yield just ripping. I like to look at this one more. Just a new highs. Unbelievable. 4.7. Just encroaching on 5%. With all that said, it's a little spicy, but just very strong.
And you know what's interesting? The yields here are just kind of doing, because the yields, this is making financial everything from lending more restrictive. The Fed doesn't even need to raise rates. The yields are doing it for them, right? So it's interesting. Okay. All right, guys. Well, that's everything I wanted to go over in this edition for August of our Futures Monthly Outlook Recap Analysis. I hope you guys enjoyed it. Again, my name is Shark. Don't forget, if you haven't already, subscribe to the channel to keep an eye out for videos that I post. I really appreciate it. A thumbs up, a comment. Let me know what you think, higher or lower in the markets. Love to hear your guys' analysis and input as well. So thank you so much. If you want to support me in other ways, check out the descriptions for some links and to my link tree. And that's about it. Other than that, I wish you guys a great rest of the weekend, and I will see you out there in the markets. Remember, a prepared trader is a profitable trader, so plan your trades and trade your plan. Again, my name is Shark. Thank you so much for joining me. I'll see you out in the markets.